Hey everybody, Brad Hesselberg back again with another episode of the Market Forge on a Saturday evening, looking at the previous week's price action, looking at charts, and trying to get an idea of what the heck happened. We saw a ton of volatility in the crypto markets and the tech sector. We're going to go over some charts showing what it looks like to me. A lot of noise, a lot of volatility, but in my professional opinion, it actually looks like a rotation to me, which is not uncommon in these types of markets. They want you to be spooked whenever things are switching over. And I'll show you what I'm looking at here in the charts. Now, before we get any further, remember this is not financial advice. I am in fact a financial advisor. I'm licensed and registered. You can check out my IAPD. I'll put it in the description below. I've also got a unique offer for those of you that are actually looking for financial advice, but it's not your traditional model. Feel free to take a look at that. I'll put a description in the chat below. And I also put together a PDF for those out there that want to get some idea on how I come up with my analysis and really what I'm looking at on a broad scope. But let's just go ahead and get into it. The first thing I want to take a look at is USDT dominance. Now, we haven't looked at this chart before on this show, but it's one that I pay close attention to. Now, this is going to be relevant to the crypto space, and I've actually been using this as just a bit of a liquidity measure. Actually, we're looking at Dixie. Here we go, USDT. I've been using it this as a bit of a liquidity measure. Now, if you've been watching the shows here over the last few weeks, you know that I'm watching Bitcoin because Bitcoin tends to be incredibly sensitive to liquidity. We had small caps, S&P 600 and S&P 500 looking to grind higher, but Bitcoin was selling off. Now we ultimately saw that come down this week, and we'll cover that as we go on. But I'm just looking at it overall from a liquidity perspective. Now I do like to watch crypto just because it gives you additional insight outside of traditional markets. So what we see here is essentially the Dixie equivalent in the crypto space. So if these are going up, crypto is going down. So you can see the inverse relationship. And what I was looking at was you had an incredibly aggressive move, starting in January this year, say, 3 weeks ago, started here and it rallied up 59% over like the last 3 weeks. That's an insane move, almost similar to what we saw in silver and gold here over our last couple of months. So this is a big move to the upside. And then what you end up seeing is that it did sell off, and crypto will basically show you exactly the inverse of what this is. Now, what I'm watching are these two red rectangles that I've put together here. These are previous areas where USDT dominance sold off, which means the crypto, aggressively pushed to the upside. So you'll see here, what you want to see when we get into these liquidity pockets is, does it continue to rally higher, or does it get into those zones and then quickly drop off below there? That tells you and what the sentiment is. If it hangs out in these liquidity zones, usually that means it's bullish, right? Like liquidity is pooling up there, and investors are still, in this case, selling their crypto for stable coins. So what you saw is it held steady here, pushed aggressively through there, and then we got to the second liquidity zone, which was really the main one that I was watching, and it essentially matches USDT's previous high before we had a massive sell-off in USDT and the crypto markets ran aggressively. Am I advocating buying crypto? No, not in any way. This is not advice. If you're curious about crypto, that is something that I actually do give advice on through my offer. But am I advocating for it? No, not at all. It's going to completely depend on your risk tolerance and where you want to go, and what your how risky you want to be, really, and if you're willing to throw money away. But what I'm looking for here is just general sentiment. So what we saw is that it pushed into the second liquidity zone, and then that's where it started selling off. So what I'm looking for is, does USDT dominance find support here? I'll go ahead and delete our Fibonacci retracement. This red line is my first line of defense. If it finds support here, it's likely going to go higher, and crypto is going to continue to go lower. That's what it looks like to me. So that's where I'm watching, right? So it could go up, it could go down. Haha, that's funny. We all know that. But what you need to do is understand how it's going to react at key points, and that's where you get your understanding of what's going on in this market. So this is USDT's line of defense. If this holds support along with these VWAPs, it's well above the 50 and the 20 moving averages EMA. So it looks bullish. Don't get it twisted. Like there's certainly there was certainly aggressive sentiment on Friday that crypto's back and we're gonna rally. Um, could that be? Of course, that could totally be, but you want to watch how it finds support at key areas. And if it finds support there, then cryptos can continue to bleed. The dollar index. Okay, so this is the Dixie, same concept, right? So if the Dixie or the dollar is going up in value, typically risk assets, equities underperform. Not always, but it tends to be an inverse relationship. So we want to watch these things to get an understanding of what the overall sentiment is here and how it's going to impact our precious risk assets like stocks and mostly stocks. So what are we looking at here? This is my liquidity zone. We got to get all the way back up here before we even think this looks bullish. This is a bearish chart pattern. If it gets back up here and holds, and even if it pulls back, it's going to want to find support here either at the 20 or the 50. Okay, if it finds support in any of those, then we're gravy. But the fact of the matter is that we're hanging out around the 20. If it can't even get above the 20, Dixie's going down, assets are going up. Can I is that a guarantee? No, but that's typically the correlation, and that's why we watch these things. The U.S. 10-year. So this is the U.S. 10-year Treasury. Why do we watch the U.S. 10-year Treasury? Well, yields, the bond market tells us an incredible amount of information. Even if we're buying assets, the 10-year still tells us a whole lot. Tends to be bearish if it wants to continue to grind higher. Tends to be bullish if it wants to make its way down. So it's a whole supply and demand dynamic, right? Yields have to go up if there's no buyers. They have to raise yields in order if no one's buying, so they have to raise yields to make it attractive. If it's coming down, that means that the 10-year there's more buyers than there is supply, so that means that they're able to lower the yields. We want to see yields come down. They've been pretty high for a long period of time. So if we continue to see those yields come down, that tends to be good for our risk assets. And again, you can see here is that it bounced off of the 20, and it seems to be finding support between the 20 and the 50. So that's going to be something to monitor. Currently, it's in a bullish chart pattern. So if we came into this red liquidity zone, we were able to find support and hang around in there for a little bit. We can even get all the way back down here before it finds support and comes back down. So that's what we're going to be watching for. Is this going to continue to trend higher, or are we going to break trend, come back down here, and start getting those rates lower? The QQQs are the NASDAQ. This is my NASDAQ indicator. We've been looking at this basically since the inception of this show, and it's basically been downtrending. You had a false breakout here. Here's how liquidity works. Okay, this is exactly what I'm talking about. This was your liquidity pocket, also your previous all-time high. We had mapped out this liquidity pocket. It came in here, tried to make a breakout, and it failed. It got into our liquidity zone and it failed. This is a bearish retest because it wasn't able to hold. You see how that works? If it had been able to hold and hang around in here for a little bit, that would look pretty bullish, with an opportunity to go higher. It did not do that. You couldn't even get 3 candles to hang out in here. And then we immediately aggressively sold off last week. Each one of these is a day. And now you're below your 20, your 50, and all these volume weighted moving averages. Not bullish, not good. That is not where you want to see it, and you saw it in the tech sector absolutely last week. A lot of it's software. Software is selling off because of, well, supposedly because of the AI trade, because just now any Joe Blow that can use Claude Code is able to create CRM systems that, um, you know, rivals some of the high cost, high pay services that are out there. It makes sense. It makes perfect sense. If we cannot get above here, you're likely to see. I mean, it rejected on Friday. You had a nice move on Friday, but if you understand the context, we still were not able to get above our 50-week moving average. That's bad. We don't. We can't have that. Um, so if it can't get above this, then it's going to continue to trend lower. Tech is going to continue to sell off. Where is it selling off to? Well, what you saw last week is the Dow Jones Industrial Average broke its all-time high. It was 50,000. What does that tell us? Okay, crypto sells off. Um, the Nasdaq is selling off, but then the Dow Jones breaks all-time highs. That means that people are going into a safer equities trade. That's usually what the Dow Jones Industrial Average is. It's long-term industrial companies that have been around for a very, very long time, tend to pay high dividends. They don't see a lot of volatility, but they tend to perform well in uncertain markets. It's almost like gold in a way, where it's more of a risk on but a risk off trade, if that makes sense. So when you see tech sell off, it's been selling off for weeks now, and it keeps looking worse and worse. But then the Dow Jones goes up, that means you're seeing rotation. That's why my argument is that this is a rotational market. It's not unusual to see volatility in a rotational market, and we'll see if we continue to see that going into next week. But the next thing you want to take a look at is gold. Gold was, I mean, we talked about this. Gold was like parabolic. The only thing that was more parabolic than gold was silver, and actually USDT dominance was looking pretty parabolic too, and that's why crypto sold off so aggressively. But here you have, your new liquidity zone, which is going to be right around in here. Um, what I will point out is that gold is holding up better than silver, and we'll take a look at that here in a minute as we rotate it into our next chart. But this green zone is our golden pocket. So if you run Fibonacci tracements, which I did before jumping on the show, it gives you an ideal place where you would see um, sort of accumulation trend. And that is a bit of what we're seeing here. You're staying above the 50, all right, the 20s mixed in here, and you're staying within some of these volume weighted moving averages. That is still bullish. As long as it can hold this zone, then you're going to be good. You're going to be looking pretty good. You're going to be looking pretty good as far as gold is concerned. Ultimately, what you're looking for is when it gets back up to here, do buyers continue to push that price up, or does it sell off? Okay, that's what we're looking for. So you got a pretty good move from here to here. Really, what happens here is going to tell you exactly the sentiment on gold. If it gets up here and it sells off, that's going to be it. This will likely be your gold top at least for a while. Silver, silver, not the same sentiment. Not the same sentiment here. So this is not our Fibonacci retracement. This is not our golden pocket. This is a different box. This is one that I had drawn previously, saying, hey, if it gets back down in here, you're still okay, but you need to find support. The problem is that we're below all these moving averages, which looks pretty bearish. Could we wick up through here and find support and hang out in here? You bet, absolutely. The volatility that we've seen in silver is definitely within reason to see it do that. But as of right now, I needed to get at least above this 50 EMA before I'm even considering it. Right now, it's looking kind of bearish just with these gaps and the aggressive sell-offs that we've been having. All right, Bitcoin. Here it is. Bitcoin absolutely got demolished last week. It's hard to say exactly what's going on. It looks like a leverage sell-off potentially. Now, if you've been in crypto, if you're at all familiar with the space, there is something that is talked about pretty aggressively, being the 4 year cycle. 4 year cycle top was basically around October, and then ever since then, you've had downward price action. So you could certainly argue that the 4 year cycle is still in play. You're pretty down, like you're almost 50% down from the all time highs. And you fell through some pretty significant support. 69K was supposed to um, was a previous high, and it was considered to be pretty good support, and it just knifed right through that. And it did end up coming right back up into that 69K. You still your sell off candle still bigger than your buy candle. Friday looked really attractive, from a buyer perspective if you were able to catch that bottom, but I don't like catching falling knives. That's not my game. I want to see it, at least get back up into this red box before we can consider this bullish. And you've still got your 20 and your 50 way overhead. You need to see some pretty aggressive price action in order to get it back up here. So what we're watching for first and foremost, before this even looks bullish again, we got to get back into this red box. You just have to, and that will help us understand, where we're going from here. Not to mention, this green box I put together was significant consolidation. This was back in 24. This was late February into September. Okay, that took a while. That's a lot of consolidation. So is it possible we just see this thing consolidate again for a while and then go up or down? You bet. Like that's literally how Bitcoin trades. So yeah, this is a tough one. Again, we've been watching this one for weeks. This was my number one concern. You seem to be getting a bit of a pattern. We had gold and silver sell off significantly 2 weeks ago and then struggled to get back to highs the following week. And then last week we had crypto sell off aggressively. Tech looks weak, and things are rolling into things like the Dow Jones Industrial Average and the S&P 600. So it's mixed. It's mixed, and I'm still pausing because I would like to see crypto and the risk assets perform like the S&P 600, because then that tells me that it truly is a rotational market and risk is just catching up. Or crypto's trash, which is certainly possible. I'm not going to lead with that, but it certainly is possible. Ethereum, same exact situation, only worse. Ethereum got absolutely plastered last week. And we need to at least get back up into 2400 before this looks bullish again. You did have some aggressive price action on Friday, but what you notice is that you still got stuck behind the weekly and the monthly VWAP, which is not good. It's not good. You get these aggressive candles to the upside, but if you can't get through these moving averages, it still doesn't look bullish. It still looks weak. So as of right now, crypto still looks weak. We need some aggressive price action to the upside before this looks appealing in any way. But again, I watch it because I want to understand the risk sentiment. It's been slightly confusing. We've seen Russell 2000, we've seen the S&P 600 perform incredibly well, but then crypto performs really underperforms, and historically that's not the case. So to me, this next week is really, really important because I want to see how risk assets continue to perform, or do we get some kind of other sell off? Do we see the S&P 600 sell off? Do we see the S&P 500 sell off? I think it's a very interesting time. I do think it's rotational. Rotation certainly is there, but on the same token, there's some other things that I want to see before I'm convinced that that's what's going on here. Total market cap, exact same picture. This is a crypto total market cap, so this is all cryptos excluding Bitcoin and ETH, and this is moving exactly the same way. It looks bad. It there's a lot of leverage in cryptos. Could this be a leverage issue? Yeah, it certainly could be. But the sentiment's in the toilet, and nobody seems to want to trade these things when same time a year ago, sentiment couldn't be more bullish. So a lot can change. But again, you're stuck under these volume weighted moving averages. You're nowhere near your 20 or your 50. If anybody's telling you that crypto's back, yeah, they don't. They're not looking at the same things that we're looking at. S&P 600. So this is where it gets confusing. And we've been looking at this S&P 600, and this looks really, really bullish. We put together this liquidity zone here. It was the previous all-time high back in November 2024. Perfect breakout. Retest that zone, and then we go to new all-time high. That's perfect setup. I mean, that is exactly what you're looking for when you're looking at these assets, when you're investing in these assets. I mean, it's perfect price action. Moved off the 20, and the 20 is here, the 50 is down here. It looks beautiful, and we've been watching this basically since the inception of this show. We'll say I called that one. Um, but and that's why I'm watching crypto so closely, because the small caps look fantastic, and typically the small caps outperform, and then you get a rotation further down the risk scale, which your ultimate risk scale is crypto. That still is my canary in the coal mine. So it's weird. S&P 600 breaks out to new all-time highs. Crypto gets completely crushed. It's an interesting dynamic that's taking place in the markets right now. Your volatility index. All right, so volatility index, this thing has not held anything in the past since November, right? So we had this nice volatility spike back here in November. Ever since then, this thing just cannot hold up. We get quick volatility spikes, and then it sells off aggressively, which would indicate that there's some intervention potentially that's going on here that's managing to push the VIX down every time this comes up. Now, again, this identifies volatility in the markets. Is volatility bad? No, you need volatility in order to essentially make money on these assets, either on the upside or the downside, depends on how you're trading it. But what we want to see is the VIX going to continue to get suppressed, or are we going to actually start to see this thing move higher, which could ultimately end up leading to sell-offs in the other equities that we've been watching. Tech, crypto have led. Other assets want to seem to go higher. So is that going to continue, or are we going to see that trade-off come into play? We'll see. That's what I'm watching here this next week. The one thing I will point out is that your 20 has flipped your 50. And I don't know, not the last time, but typically when you see something like that is when volatility does return. So we saw that here. Is that what we're going to see here? Are we going to see volatility return? Are we going to see these aggressive spikes to the upside? Or is this just going to continue to basically grind higher with, lower highs? We don't know. That's what we want to wait and see. But that's what I'm watching. I mean, that's what I saw this week. That's what I'm looking for next week. What does the dollar index do? What does USDT dominance do? What does crypto do? Does it bounce back, or does it continue to grind lower? And then what does the S&P 600 do? Do we continue to see small caps outperform, or has it been more of a fake out and we're ultimately going to see it sell off? That's what am I going to be looking for. I know there's going to be some important economic data that comes out next week. It's not about the data, it's about how the markets react to it. So if you get good data and the markets sell off, obviously that's quite bearish. But if you get bad data and the markets shrug it off and it continues to grind higher, that means that markets want to grind higher. They're not concerned about the data, and they know something that we don't. So that's what I'm going to be watching for here next week. Anyway, thanks for showing up. If you found there was anything of value here, please like and subscribe. It certainly helps the show. But thanks again for coming, and enjoy the rest of your day.